Welcome, everybody, to the Industrial Insights Podcast. I have Brandon Sedloff of Juniper Squared with me today. And for those who don't know Brandon, he has been in the game for quite some time now and is the Chief Real Estate Officer, and then hosts a podcast called The Distribution, which you can help us understand a little bit more about. And I feel like you have such a great intersection of capital, real estate, and then even like a technology that like those are all so present in our world and places where you guys excel. So I appreciate you making time today and being on the show with us.
Thanks, Justin. Thrilled to be with you, and thanks for having me. Excited for our conversation.
Yeah, I can only imagine looking back 100 episodes and then thinking, what did I learn? And like going through that, like a deja vu moment of like reliving them. That was an episode I just listened to that you had put out recently. What was that experience like going through that? I mean, you clearly gained like a lot from it, and it was great for you to be able to articulate it because it's a lot to like look for themes and patterns and to like get more value out of that initial experience. So I'd love to hear more about it.
Yeah, no, I appreciate that. And just for your listeners' context, as you mentioned, I host a podcast. It's called The Distribution. I started it about 2 years ago, not because I wanted to be a podcast host, but because my colleagues at Juniper Square were really curious to better understand what was happening through the lens of the industry leaders, people like yourself and our clients. And so, I would bring these people in and they would do a webinar or a Zoom call with us. And that worked really well, but the demand by my colleagues was so great that I wasn't able to keep bringing executives in to talk to every team. So I started recording the conversations. And at some point, somebody said to me, "Hey, these are really interesting conversations. You're recording them. Why don't you just turn this into a podcast? There's nothing confidential here." So with the permission of my guests, I was able to release a podcast. That was in 2023. I think the first one was in March. And we just, as you mentioned, completed 100 episodes. And I just feel so honored and privileged to have the opportunity to sit down with leaders across private markets and help them tell their story and understand kind of what's top of mind for them. There's a lot of content going back 100 episodes to answer your question. So the honest answer is I used my friend, AI, and specifically a tool called Notebook LM to help me organize some of the themes that came out in all of the different conversations that I had. And I think, obviously there's market related, fundamentals themes, and the market was very different in 2023 than it is in 2025. So I didn't focus so much on those for the 100th episode, where I actually just was a solo host. I didn't have a guest. I just spoke for 40 minutes about my thoughts. So anyone who wants to listen can head over to the distribution and download that episode. But I think what's really interesting is when you look at the people behind the companies that are driving the market, how did they get to where they are in their career, and how unintentional it was in many, many instances, and how much their success really relied on serendipity. But serendipity is driven by a growth mindset, being open to trying new things, being open to saying yes, being open to making changes, and how the trust in people and the importance of relationships came through in nearly every conversation I had over the last 2 years. And so, what that tells me about private markets, which includes private equity and venture, credit and infrastructure, but also inside of private real estate, which obviously includes all the major food groups, including industrial, is the importance of trust, is the importance of education, and is the importance of relationships. And that's why, folks like you who have this podcast are doing such a great service to the market, because you need to educate people on what's happening, as that's how trust is built and relationships are formed over years.
Yeah. Who overinvests in relationships? And then you're
Well, I don't
like,
think you can,
man,
I don't think it's,
yeah, and I love it's interesting of the power of story, like that you hit on and like that you hit like so many times in that episode you put out, because I always struggle with how much of that do you get into, how much do you have time for this format versus like across the table perhaps. And so that is interesting to like think through the power of that. And probably more importantly, the power to the person that you're talking with for them to be able to re-articulate what their story means to them today, maybe, and to like reinterpret that into like today's version of it. I feel like there's a lot of power in that.
yeah, I think it's important to realize, if you kind of deconstruct or decouple kind of business at its core, any business, people who are going to hire you, people who are going to trust us with our solutions at Juniper Square. Yes, they're looking at the company, but ultimately they're looking to the individual who's the face of the organization. And most people want to work with people that they trust, and I've just found that in order to trust people, you have to understand who they are. You have to understand their story, where they came from, all the different kind of component pieces that made up their character. And it's really hard to do when you're looking at a pitch deck. Your eyes start to glaze over. Everybody kind of looks a version of the same.
Yeah.
I talked about this on the episode. I've had guests, executives of very large multi-billion-dollar companies say, "Well, why do you want me to talk about myself and where I grew up and what my parents did?" And I think the reason I want to do that is because that is who they are at their core. Those early experiences inform their DNA, their work ethic, their drive, their interests. And so trying to get to that in a little bit more detail on my show is one of the core components. And there's other great podcasts to talk about market fundamentals and other things, but I really try to focus on the story behind the people who are driving private markets.
Yeah. And you came across that. That wasn't how it began for you. You've like figured that out as you went.
Yeah, it was interesting. I mean, my first episodes, and most people haven't gone back to listen because we didn't have many followers when it was new. I talked a lot about kind of market fundamentals and cap rates and details of micro markets and what the Fed is going to do. And I realized very quickly that those are really interesting topics, but there's people far more credible than me who are better positioned to pontificate on those things. And by the way, they don't have much of a shelf life. 6 months after the recording, the world was changing so quickly. Even 6 weeks or 6 days after the recording, the world was changing so quickly that the content wasn't very durable. And so, as I listened to people talk and I got feedback from what they liked about our interaction, it was very clear that people want a chance to kind of fully develop their thoughts. They want a chance to share their vision, but they want to do it in a non-pitch way. So, I started just by kind of creating space to let my guests talk. And then, as we focused on the things that they would talk about, I found this very kind of natural rhythm where, getting somebody to talk about themselves and open up kind of breaks down some of the barriers. It allows them to be a little bit more free and flexible and comfortable in how they share their story. And so I always like to start with the person talking, my guest talking about themselves. And obviously, when you get to the company part, that's, on autopilot. Everybody can talk about their company. They've pitched it. They've talked about it to their colleagues. And then when you get into the market, the market fundamentals and kind of the outlook and leadership principles, I find it's a little bit more interesting once you've kind of anchored it with who the person is and their true DNA. So, look, these things evolve. People used to ask me, what is my style? What podcast? Who do I admire? And the reality is I didn't really listen to enough podcasts to know. So as a result of this, I've started listening to a lot more podcasts to understand the different approaches and styles. And, I'm always trying to iterate and figure out kind of what's best for me, because if it's authentic to me, I feel like that comes through from my guests. So, I don't try to speak to any one person. I just try to focus on, who my guest is, what their interesting story is, and help them tell that to the world. And, hopefully people find it interesting. And if they do, great. And if they don't, so be it. I think that's a benefit. We're similar. We're not doing podcasting as a business. We're doing it as a way to build community and share insights. And as a result, we're largely unencumbered by some of the more commercial aspects that drive other podcast hosts. And so we can just be authentic and be ourselves.
It's the best. I love it. It is interesting to think of like, where can you take it, or like, how can it like satiate your like a creativity and like your curiosity? What would you say would be one or two of ones you're listening to now that you've thought have had some good ideas for you, or ones that like you've pondered on a little bit that you've listened to that might like inform, or like you might appreciate like how they run theirs?
Yeah, I mean, I think from a format perspective, there's kind of two extremes, right? I think you and I know Chris Powers, who formerly had the Fort podcast and now it's Powers podcast, and Chris, somebody I've known for a long time, and I did seek inspiration from his endeavor as a podcast host, and so I should give credit where credit is due to him. When I think about where I listen today, there's kind of two types of shows. I really like Founders Podcast by David Senra, and that kind of inspired me to do the solo episode where I didn't interview anybody. I just focused entirely on my interpretation of other people's insights. And that's what David does. He, reads biographies and autobiographies of history's greatest entrepreneurs. And then he spends, anywhere between 45 and, 90 minutes distilling down the insights that he's learned. And I find that to be an incredibly effective format for my style of learning and retention. On the other side, you've got podcasts like All In, which are have 3 to 5 different guests, and it's highly interactive, and it's a debate, and it's a
Yeah.
discussion, and a drama, and everything in between. And whether you agree or disagree with the politics or the conversation, I think that that format is also interesting as a way to get some insight. So those are kind of two extremes in terms of formats, and I think there's elements to take away from both, but ultimately for me it's less about the format and the structure and more about can I get content that's useful to the private markets community, and my audience is people across private markets, and I don't I'm not focused on investors or asset managers or CEOs. It's really for everybody. And I just want to help them broaden their aperture, because what I've realized, having been in this business for over 20 years, is that there's a very strong tendency to want to work in your business. Your heads down, you're in your deals, you're in your portfolio, you're in your business, in the the dynamics of the teams that your colleagues, the teams that you manage and lead. And when you do that, you don't really get to pick your head up and understand, what are my competitors doing? What are my peers doing? What are the things that I can learn from them that are good? What are the things I can learn from them that I want to be sure I don't do? And so this is a way for, peers to learn from peers about what's working and what isn't working. And I think that's really important because, and, maybe we'll get into this, but, the industry of real estate and more broadly private markets is changing. We're at a structural inflection point where it is competitive out there. Long gone are the days of, low interest rates and, plentiful capital flowing in from everybody. And the reality is people are needing to look themselves in the mirror and say, is what got me here to this point in my business, this level of success, going to get me to where I want to go? And I think the honest answer for most people in our business is no. You can't just keep doing what you've always done, because the industry is changing. The fundamentals of how do you underwrite an asset, and what's a good market and a bad market, and how do you generate alpha from that asset, those things remain true. I don't think there's there's some iteration and evolution, but the structural changes in our industry around technology, around private wealth, around, profitability and operational alpha, these are all things that are very, very real, and I think present a really exciting opportunity. So I'm trying to make it, so people aren't afraid of these changes, but instead they embrace them. And anytime there's change, your tendency is to recoil and be afraid. And that's just because you don't have the information and the insights. So really, this is about how can we share information and insights to make change less scary, and turn it from a negative or a neutral into a positive and something exciting for everybody.
It can be a good thing. Yeah.
Can be.
I was going over some of the changes that some of the materials you guys have put out, and I love that concept of slow motion deleveraging of real estate. Like, it totally captures that moment so well. Like, because you see it in values, you see it in underwriting, as I just think of like lease rates and their effect on values in industrial. And yeah, I think a lot of people, they miss that, even though that's what they're experiencing. So with your role being chief real estate officer, like, how has that changed, like, who you're dealing with and like your responsibilities?
Yeah. So just for your listeners who may not be familiar, Juniper Square is we call ourselves a fund operations partner to private markets GPs. And we offer, two solutions. The first is a technology solution, which is focused on the relationship between the GP and their LPs. And that, the kind of different components of that vary in terms of how our clients use it, but it's an investor CRM. It's a digital data room to share potential investments with investors. It's investor reporting, and then it's the investor portal, or your kind of interface to your investors, how you share information, documents, investment performance, et cetera. And then the other side of our business, which is more exclusively focused on groups that raise money in, open and closed end funds, is on fund administration. And we support them by doing their books and records, investment accounting. We do it, through compliance, investor KYC and AML. We do it through investor onboarding, helping them, complete their subscription agreements as a service. So we do all of these different things. So we think of ourselves at Juniper Square as wanting to be the most important partner besides the investor to the private markets GP. The business started in 2014. I joined in 2016 as the founding sales leader. I think I was the second employee. At the time, in 2016, we had about 30 clients. And as the business has grown and evolved, so too has, our client base. So today we serve over 2,200 private markets GPs. Those GPs manage over 40,000 investments on our platform across more than 650,000 investors, right? So before we were talking, you mentioned you had some investments with some of our clients. And so you would be an investor, a single investor that might invest in multiple deals. So the business has expanded a lot. And as part of that expansion, we've also moved in, kind of outside of our founding asset class, which was real estate, into other asset classes. So venture capital and private equity. And so my role as chief real estate officer is really to kind of represent.
Thanks for that context. That was perfect.
Yeah. So my role as chief real estate officer is to really represent the interests and the needs of our real estate clients, and then to translate those into the solutions that we build and we deliver. So think of it more as kind of a strategy type role. Also, kind of as an aside, given our size and scale in real estate, we see a lot of information, a lot of data. We talk to a lot of people. Of our 2,200 clients, probably 70-80% today are still real estate. By the way, if we talk 12 months from now, I bet that's a very different statistic given the growth we're seeing in private equity. And as a result, I've kind of adopted this, or, been given this opportunity to share insights on behalf of our clients in the industry. And we and I am kind of seen as neutral, right? We don't raise money. We don't manage money. So I can help GPs, investment managers share, things with others that they may want to have heard, but maybe afraid or reticent to share because they're worried that an investor might frown on them for saying it. And so there's a really strong kind of ecosystem and community element behind my role, which is, to help drive the industry forward and make sure that, both we at Juniper Square and our clients are staying on top of and ahead of the changes that are happening, so nobody gets blindsided. And where there's problems or challenges, let's not just, pretend, sweep them under the rug. Let's talk about them. Let's bring them up. Let's discuss them in public so we can help each other solve those challenges. Because the reality is most people in our industry are facing a very similar set of challenges given kind of how things have evolved.
Yeah, I love the importance that you can play for these people when you think of the responsibility that they have and the trust that's been invested in them, and their tolerance for risk, or to manage that appropriately, and to have this be a huge part of that whole platform. So I feel like that can help you have a unique space where they probably don't have a whole lot of relationships with people like you that occupy that space, that aren't competitors, that aren't investors. So I got to imagine that helps open up this conversation in a whole different way that most people are used to.
It does. I mean, it's a gift. It's a privilege that, we've had an incredible team, great product, amazing sales and support and engineering and everything that have gotten us to this point. And, the fact that our clients can call us and not just, talk to us about how to use the product, but ask us what we're seeing in the market, and, share their perspectives with us and ask for help and ask to be connected to people across the industry. I mean, that is very powerful because we are all in sales. I always remind my clients, if you're a GP, you're raising money, you're selling something, you're selling yourself in your funds or your deals. If you're a broker, you're helping people represent themselves, on the buy side or the sell side. So we're always selling. But I think the reality is that, people want to work with people that they feel like really understand them and their business, and that they know and trust, and quite frankly, can listen and help them with their problems. And sometimes, you have a solution to the problem, and sometimes you don't, but you might know somebody who does. And I think that's what I really like. And I just, whenever someone says, "Oh, you're a vendor," I always try to reconnect them, reposition it to, we're partners. I mean, sure, vendor is a term, but if somebody starts to think about you or me or any of us as vendors, I think you're already off to a bad start, because in my mind, that implies a hierarchical relationship. We are higher than you. We are hiring you to do what we say. And that's fine. And some people need that. But I think, and you tell me what you see in your business, Justin, but I'd imagine your best relationships are ones where you're able to share insights and feedback and collaborate, as peers and partners, not as a vendor or a service provider.
It's something to aspire to, and I feel like when you reach it with a certain person and you feel it, you're like, "Wow, that's a breath of fresh air." And like now I know what the best looks like in terms of like what relationships can be. So I love it. I remember the first one in the business where I made that like a distinction and like I could feel the difference. And then they are clients that are with me today, and they're the ones that have grown the most, where we've grown together over what's now 15 years. So it's great to then have that, know it, and then be like, how do we attract those? How do we create those? How do we like nurture or like nourish those relationships? And yeah, it's been the best. I really appreciate that part of the business.
Yeah, it's a lot of fun. It's an important part of the business as well. And I think, for any folks out there, that work with any service provider, whether it's in your home or your business or, you are one. I mean, I think it's really important just to try to establish this concept of partnership, upfront wherever you can, because it's really incredible when there's that relationship and that trust, what you can do by learning from and with others. So I think it's an important takeaway for your listeners.
Yeah. So you spend a lot of time with your customers on site, at conferences, over dinner. How do you come up with the way of trying to like structure that on one hand and on another, like have it be what it needs to be for that person?
Yeah. I mean, and if anybody follows me on LinkedIn or kind of sees my content on the podcast, one of the themes I really focus on, and it's ironic because I'm the one talking here, but talk less and listen more. I mean, your best cue, your best insight, your best lead comes directly from the people who need help. And I think the challenge is so many people come into a meeting or come into a conference or a dinner with an agenda. I want to meet that person and talk to them about X. That's awesome. That's all about you. And that's fine. And like, we're all humans and we have business aspirations, personal, professional. But what if you flip the script and be like, I wonder what they want to talk about. I wonder what they need help with. I wonder how you can be of service to them. And so when you approach it that way, the little secret is you don't need to come in with a lot of structure because your structure is given to you by the people who you surround yourself with. So I spend a lot less time worrying about what I'm going to say or, what my agenda is when I show up, and a lot more time focused on showing up to the places where the people that I want to be around show up. And so some of that is, when we think about curating content and events, obviously you've got the podcast, which generates a tremendous amount of content. Yours does, mine does, all of them do. And then you've got kind of the way I think about it is first, second, and third party events. So first party are events that we organize ourselves and we get to control everybody who's there. And that's fairly easy and straightforward. The second is, events where we can partner with organizations that focus on like-minded, outcomes. So, for us, that's people who focus on investment managers, not asset managers or property managers. And then in particular, people who cater to CFOs, heads of capital formation, heads of investor relations, and then the strategic leaders of the businesses, COOs, CEOs, et cetera. And so it's important that you find the right community. And that means sometimes the biggest event, the most important event of the year for you, Justin, may be a total non-event for me. And that's okay, right? You're not trying to be all things to all people there. We're targeting different personas. And then lastly, you have the big conferences. And so, getting yourself into the right room, I think is really critical. And, right now we're kind of in the process of running this branding workshop with a partner. We're doing a series of webinars. And one of the things that they're talking about is this concept of an ideal investor profile, right? You can call it, and we have the same concept in technology sales, ideal client profile. What's your ICP? And so I think people just really need to understand who they're targeting and why. And once you identify that, you can be in the room. And then going back to your original question, if you listen, that, the people become your content, right? The people in the room are the insights they share. My job is really just to kind of listen and find the patterns and the themes and kind of, parse through the noise and all the chit chat on the side to identify what the root cause problems are or the opportunities are, and then just repeat it back. And that's how you get a great conversation going. And I think it can be, it could be super effective. And people love to talk, in confidence with one another. And again, that only comes when there's trust and credibility. So it does take time, but things like this podcast that you're hosting really help, people get to know one another without necessarily being in the same room as them.
Yeah, it's amazing. I'm sure you've had the experiences where people have resonated with something you said and something that you put out, and then it's a connection, even though you're like, you weren't there when they heard it and when they got value from it, but then it can still lead to like, A, the value being added, and B, like your next connection with them. I think I know how you synthesize some of that. If we're just thinking about like reflecting on your past 100 episodes, I could only imagine, how do you try and bring that back to your team in terms of like improvements, and to think through like taking needs, haves and needs, and then bringing it like into the evolutionary process of the product itself that you guys have. What's that look like, or how's that kind of work? Because it gets stuck up there, right? So now you have to figure out like what is the value internally as well.
Yeah, I mean, behind any individual is a great group of individuals working together as a team. I'm fortunate to be surrounded by nearly 1,000 people at Juniper Square now, of which maybe 40-50% spend time directly with our clients. And so there's kind of two ways that we think about building the product. I mean, we've spent the last decade, in the trenches with our customers, inside of their businesses, with their investors, really deeply understanding what they need to get them to where they are today. And I think we've done a really good job, now that we've got the scale that we have with 2,200 private market GPs on the platform. But part of our DNA has always been, and core values has always been, to build with our customers. So we don't think that we have all the answers, but we seek insights and feedback from the market to drive us. And that obviously comes in two forms. I mean, there's structural changes, regulatory changes that are changing requirements, and we need to stay ahead of those. But it also comes from, day to day, hey, I'm working in the product, or my investor needs X, or, this is something that you don't do that I would love you to help me with. What are your thoughts? And we take those insights, and part of it is just the ability to kind of really effectively track and prioritize. The biggest challenge for a technology company is that the technology is not like hard to build. I mean, yes, technically it's hard, and the devil is in the details. I mean, for example, we have 40,000 funds. Every distribution type ties back to a distribution. Every capital call or contribution ties back to a standard definition. Like, these things, you need to be very, very intentional with how you build. But at the end of the day, any great engineer will tell you these are not the hardest problems to be solved. The hardest problems to be solved are really, how do you prioritize everything that we're hearing from the market, and which is thing number one, which is thing number two, and which is thing number three. And you have to kind of balance that with what your biggest clients need against kind of what the whole market needs, against, what your business needs to achieve its outcomes. And finding that kind of the intersection of those things is really what I think makes companies great, or ultimately, if they're unable to do that, leads to their failure. Because it's super, there's no shortage of ideas, and there's certainly no shortage of problems that people need help with. And so how do you just stay very, very focused and very true to your core value proposition, and know when, totally understand that this is a really deep problem for you to solve, and we're not the right people to help you solve it. Like, that's super, super critical for folks to understand. And I wish more, partners or vendors or service providers were transparent, because I think, people really undervalue the power of saying no, or not right now, or I'm not the right fit. And so I think that's just an important reality of how the world works.
Yeah. To have the confidence, or sometimes in some like entrepreneurial circles, like the cash flow confidence, to have that abundance mindset and just be like, I don't need this customer. I can't serve them poorly. They don't deserve that. And like, to give them the respect almost to like point them in a better direction.
That's right. That's right. Yeah.
I love that. That's awesome. And then I could only imagine you trying to be knowledgeable about all the different asset classes, in addition to all the different like vehicle structures. So like for me as an industrial guy, just getting hip to the data center game is its own challenge. I could only imagine like, not that you perhaps have to be like the operational, like a specialist for each asset class, but you definitely have to like stay extremely knowledgeable about it. As I got to imagine ULI is one thing that helps you with that, or how do you like maintain mastery over all those different asset classes.
Yeah, I would definitely not say I have a mastery over anything, let alone any asset class. Always learning and always more to learn. Look, I think again it comes back to having a lot of conversations. My teachers are my clients in the market, people like you, people who are in the trenches. And what I think is interesting from where I sit, which is maybe different from where you sit, is I don't need to know the ins and outs of, powered land and data centers. And, I don't need to know the ins and outs of lease terms and cap rates in a specific market. But I need to understand the big trends. I need to understand, where capital is coming from and moving to, and kind of what are the structural changes. And so when you kind of like zoom up or zoom out from the asset level and the sector specifics, you start to look at some of these kind of horizontal themes that permeate all sectors and all of the players in those sectors. So one of the big themes that has emerged is really around technology and AI. So how is that changing the businesses that our clients have? How do they run their investment management business? But how is it impacting their assets and their ability to drive NOI at the asset level? And so, the way that you do that inside of a warehouse is different than how you do that inside of an office building, which is different than how you do it inside of a shopping mall. But AI and technology is a theme, and there's a gazillion offshoots of how, an investment manager would need to think about that. Another major theme is sources and uses of capital, right? So we've seen a kind of massive increase in private capital, private wealth, whether those are accredited investors, sophisticated, families and family offices, or even kind of quasi institutions coming into alternatives broadly, but also into private real estate. And, their requirements, especially when they have tax obligations, are very, very different than the institutions who often are tax exempt. And so trying to see how, your clients are thinking about, the buy, the sell, the trade on their assets, given, the sources of capital and what they need from their real estate investment, is a really interesting structural shift. And depending on where you sit in the ecosystem, the way that looks for you, might be a family looking to sell, wanting to mitigate their tax obligations. Whereas for me, it might look like an investment manager who wants to get more families to give them discretion over investing their capital into industrial or logistics, for example. So that's another kind of big trend that permeates all asset classes. And then I think, the last one is just operations. We talked a little bit about how the market is different. It's harder. What got you to where you are today isn't going to get you to where you want to be. And part of that is just how do you get better at your job? And part of that is, how do you run a better business? How do you run a more efficient business? How do you attract the best people? How do you create alignment to keep those people on your team, keep them incentivized and encouraged to be their best version of themselves? And then a lot of that has to do with the asset level operations and alpha. Investors used to be able to put money to work and, hope, just kind of watch the markets compress, and the value of their asset increase because there's more demand than there was supply. And I think you and I both know those days are over. And so what we're seeing is the rise of the operator. And that's, how do you
Yeah.
buy the best assets? How do you operate them, at the property level? And then how do you kind of position for the best opportunity on the sell? Or for many, it's a long-term hold. And there's just a lot more focus right now from the market on this idea of operational alpha. So, who are you investing with? Where are they investing? How are they operating? How is that different? And you really have to have a focus and a story to tell there if you want to be competitive going forward.
Yeah. I got to imagine that's a huge challenge for everybody, like taking the legacy baggage away when you can't afford to keep carrying it around. And for us, we'll see like the acquisitions officer turn into the asset manager when it's time to slow down on acquisitions. And like the asset managers have to live with the deal that the acquisitions person bought. That's always like the quintessential example of like the difference between acquiring an asset and like operating it. And then we generally see it with like the lease, where when you buy something, you need to do your due diligence and have a clean slate when you close. where with a lease, you're living with the asset for 5 years and what happens like to the nth degree on every aspect of it over time and like operating the asset. So I could definitely like feel that. And I could only imagine like the pressure then to take something like AI that is newish or has like less history and precedence and track record, and then figure out like how to take that leap of faith and integrating it and like prioritizing what kind of like improvements that you can make and your own like processes. I feel like that's been a huge thing I've got to imagine you're hearing in these conversations is like breaking every task down so that it can be scrutinized and then like figuring out which part of that can be automated. And I feel like that's a thankless task at first, or like the idea is that it is a thankless task. But ultimately, like if that's part of the journey, then like let's not make it thankless. Like let's find a way to like repackage that or like change the value of that so that people can do that and like see the benefits. But that's been an interesting one talking with people of like it's a struggle. And I know when I take that and try and internalize it amongst our team, like it is not easy. So I can definitely like commiserate with like taking the time out of a packed schedule and like a lot of responsibilities and figuring out like who is the right team member and what is the right like a focus for that initiative. So that seems like yeah, everybody's got to be going to that through that to some degree.
Yeah, we talked earlier a little bit about how, change is hard, and AI and technology and real estate kind of is one of those hard changes. And, I've been in this business for a long time, and I remember, before prop tech was even a thing. And then as, technology started to emerge, it was this thing, but everybody was very excited to not, use technology. They were very proud to be traditionalists. And over the last, 15 years, that's changed. And I actually don't even like the term prop tech. Juniper is not a prop tech company. We don't just do property. We do kind of everything private markets, and we do more than technology. But that aside, I think it's a misnomer, because the reality is if you're in private markets, if you're in real estate, if you're in industrial, you need to be using technology inside of your business, period, full stop. It's no longer acceptable to kind of claim to be a technophobe. And so if you kind of drill that down, there's all kinds of technology and, cool shiny objects you can buy. But I think, the way I think about it is there's, to your point, there's really two categories. There's things that exist off the shelf today that can make me more productive. And, that's kind of decomposing the tasks that you do in your job and figuring out where you can get leverage. And there's a lot of, great tools that you can get from the LLMs, whether that's, Gemini or ChatGPT or Claude or Anthropic or Grok or any of these large language models that are out there, can drive just a lot of productivity in your day to day. And then I think, related to that, the challenge that a lot of people have in thinking about the power of AI in their own business is that so much of our thinking is designed around workflows based on human beings. But if you kind of decompose the work that's done, there's two types of jobs to be done. There's knowledge work, which is things that you do behind your computer. And then there's human work, which are things that only human beings can do, building relationships, having empathy, etc. Going forward, much of the knowledge work is likely going to be replaced or will be replaced over time by AI. Whereas the human work cannot and will not be replaced, at least hopefully in our lifetimes, by AI. Goes back to the power of relationships. So when you think about the knowledge work or the computer work, thus the work that's most ripe for disruption or evolution by AI, so naturally we think about, well, what is our role in that work? Well, I sit at my computer, I open up a document, I type into that document, I review that document, like, but take the human out of the work. Like, what if there is no human? There is no sitting at your computer and these things just happen. And then you start to reimagine some of these workflows in the art of the possible. And I think it can become quite inspiring. Obviously, there's some challenges. What does that mean for the economy and job creation and other things that are like very, very real and prudent and pertinent to think about. But just really understanding kind of how you can reimagine your own job and your own organization, if you're using AI in a more efficient way. And I think, we're not that far away from this. Obviously, I believe, and I think we at Juniper Square believe that technology is there to drive these kind of massive step change improvements today. The biggest challenge is people's willingness to adopt and evolve. And so you've got to kind of go slow before you can go fast. And we're in that, go slow-ish phase right now. The other thing I would just say on AI and technology really quickly is the seven, today there's seven very, meaningful large language models, LLMs out there. These organizations have a tremendous amount of capital. As you know, they're powering, the insatiable demand for powered land and data centers. And they're going to continue, mostly continue to grow. And the amount of investment they require is far greater than any, individual company, that's listening to this can probably afford or justify, or definitely afford or justify. So rather than trying to build your own LLM, what you need to do is you need to find applications or service providers that kind of have their, sit on top of these large LLMs like we do. We use
Totally.
many of them, and then, have a large enough set of clients and data that makes it interesting and relevant to train the models on industry specific concepts. So, in your case, it's, industrial. In our case, it's private market. So I would just encourage people to think about that when they're out in the market, thinking about the different, components of their technology stack.
Yeah, sometimes when I hear people talk about being on the leading edge, not the bleeding edge, that's generally how I think of that thought sometimes of like, you don't necessarily have to build it. Like the resources are already going there. It's the person who knows how to utilize it, like, and package it. And like, I love that there's so much out there and that like there's so many founders that are creating all of these different ways to utilize it for industries. I feel like it like can relieve you from that pressure to feel like you have to build it or get left behind. Super. That's more than I was expecting we would cover, Brandon. But I gotta imagine you're a planner and you're excited for 2026. What are things on the horizon that you're fired up about?
Yeah, well, I think, first of all, it seems like there's a little bit more enthusiasm going into 2026 than there was in 2025. We're an optimistic bunch in the real estate space, and glass is
We
always
are.
half full, not half empty. So, I'm always excited when the market's excited. I think, I do think that there's a little bit more room to run. When we get some capitulation on kind of the bid ask spread, I think, we need to see some of these transaction volumes start to increase. It'll be very healthy, as we establish new market clearing prices. There's a lot of capital that's sitting on the sidelines, kind of ready to flow into the sector, but I think they're going to be, cautious and cautiously optimistic. So I'll be kind of really looking into where the capital that is moving is moving from and moving to, and what asset classes. I think without picking, favorite, but it's clear that the market still is favoring the fundamentals of the industrial sector across all the subtypes. We're also seeing, a focus on retail and all things living right now. So those are kind of major themes that I expect to continue to see persist into 2026. And I think, global capital flows, if you look behind the headlines and the geopolitics, the reality is the world's a very big place, and there's a lot of money kind of all around the world. And I think it would be prudent to be thoughtful about kind of where there's deep sources of capital and what those capital needs are. And for folks who are seeking capital, to not just constrain themselves to people that are in their backyard. Maybe they're on the other side of this country. Maybe they're more broadly across North America. Maybe they're in other parts of the world. But, a big part of real assets has always been driven by global capital flows. And I think that'll be, increasingly important despite the headlines and the geopolitics as we go into 2026. And then lastly, I would just say, all things brand and content creation. And it might seem cringe for some of your listeners, because, brand and selling and content creation are not things that.
Does it have to be part of it?
Yeah, does it have to be part of it? But it does, because you have to stand out. You have to cut through the noise. And it's never been easier to do it. You've just got to dive in. So I'm always excited and supportive to see people kind of dipping their toe into the waters here and getting started on that journey.
I love it. That's so good. That's great advice. I love the global perspective too. Like the longer you're in the game and the more visibility that you have. And I love going back in some of the history books of the different capital flows that have come in when you talk with the generation before us and what they saw when they thought a certain country's capital was taking over the world, or like, what would it be like if they keep doing this? So that's always great to like put back into perspective, and now probably more so than ever.
Yeah, we're living in exciting times. So, never a dull moment, but it'll be fun to watch, what changes in 2026, and for some people, what doesn't change, right? I think to some extent you always want to be evolving, but sometimes you just got to double down on what's working. And so, there's as our industry changes, I think it gets more sophisticated. I think it gets more exciting, and I think that creates opportunities for more smart people to come in and really help move things forward. So I'm as excited as I've ever been, both for the industry as well as for what we're doing at Juniper Square. So I'm ending 2025 and entering 2026 on a note of optimism and enthusiasm, and hopefully it all plays out as planned.
And what doesn't change is the power of relationships. I feel, yeah, we can't not say that again. Brandon, thank you. I appreciate you spending the time, sharing the knowledge, and being a great person to speak with, knowing the format and with your experience, and knowing also how to guide an interview. So that's something people don't think about, but being in this space, I can appreciate your skill, and I appreciate you helping me steer it the way that might be most helpful for people.
Awesome. Well, thank you so much for having me on your show, Justin. I really enjoyed it and look forward to our next conversation.
Super. I'll see you later. Yep.